let's define. Let's start by trying to define what is a money market fund. Now, and since this channel is meant to explain things in a layman's language, or that is a language that everyone will understand, I'll not go for a book definition that you'll Google in the internet and get to understand. But allow me to define a money market fund as a low risk, low return investment where you get to invest your funds in whatever frequency that you are able to, and the return of that investment that you get to make is in terms of interest. So, and it is good to note that it is a low risk and therefore it is a low return investment. So it is not a get rich quick scheme as many people might get to think. So when you are getting to money market funds, don't expect that much returns. This is a low risk, low return investment. You get to invest your principal and get some interest in return. So that is the basic definition of a money market fund. But for a better understanding, there is an analogy that I will always use when trying to define a money market fund, and that takes me to my point number 2. I didn't have something to write for the first point. So my point number 2 are the big chama analogy. So this is the concept that I use for you to understand the foundation of money market funds. Now, we have different types of financial investments because money market fund is a financial investment. When we talk about treasury bonds, treasury bills, money market funds, shares, all these fall under the category of financial investment. We have different kinds of financial investment in our financial system or in our economy. So we have different types of financial investment. And these different types of financial investments that exist in our economy have different features. You will find that there is an investment that you'll have some minimum amount for you to get to engage in that investment. The other thing is that we have different kinds of investors in this financial market. The other important thing is that we have people with different financial muscles in the same financial market. So you need to find an investment. You need to find an investment that matches your financial muscle. By this we mean there is that investment that you will find that for you to get started, you need a minimum of 50,000. An example is the treasury bills and the treasury bonds. You need at least 50,000. But is it everyone who wants to invest in treasury bills and treasury bonds who can afford 50,000 at a glance? I'm not sure. Now, when I talk about the big chama analogy, this is what I mean. I will use the example of these 3 guys here. Let's have a guy number 1. Let's use someone that we can all relate. We have a farmer. So this farmer gets to engage in their farming activities and make some returns out of that. Now, let's say that he makes his returns on a weekly basis. So he gets his returns on a weekly basis. How much does the farmer make in 1 week? 10,000. This guy makes 10,000 on a weekly basis, but he has he wants to put some money aside. In fact, let's assume that it is the 10,000 that the farmer wants to put aside for future use, for a rainy day, for their emergency funds. And now that he is someone who is financial literate, he understands the difference between saving and investing. So instead of saving the 10,000, this guy wants to invest the 10,000. And when he went to withdraw his money the last time in the bank, he had he read somewhere in the bank, they have talked about fixed deposit account. So, and on inquiring, he was told that it is somewhere that he can be able to fix their money for a given period, say 1 year, and they get to earn some interest from it. So with the 10,000, he goes to his bank and says that he wants a fixed deposit account. But after engaging with the guy at the bank, he gets to be informed that for you to invest in a fixed deposit, or for you to open a fixed deposit account where your money will be able to earn some interest, you need a minimum amount of, let's say, 50,000. 50,000. But this guy has 10,000. So there is a mismatch between what he has and the minimum amount for the particular investment that he needs. So is this the end of this farmer getting benefits from a fixed deposit account in a bank? Is this the end? That's the question that we have. Let's leave that guy there and move to guy number 2. We go to a teacher. And these are just examples. Don't think that I'm undermining any economic activities. These are just examples. Whatever that you do for life, whatever economic activities that you engage in, I respect that and do the best that we can in it. Number 2, we go to a teacher. So this teacher is paid on a monthly basis. And out of the monthly income that the teacher makes, he has some 20,000 that he can be able to salvage. So 20,000 that he can be able to salvage. And he wants to put this 20,000 aside for future use. Now, but he's a teacher, so he has some information, and information is key. Now, he don't want to save this money, but rather he wants to invest. And uko kwa staff room, he had a teacher talk about government securities, treasury bills. He had someone talk about treasury bills, and he wants to invest this 20,000 in treasury bills. But on gathering more information about the treasury bills, he gets to discover that he needs to have a minimum of 50,000. A minimum of 50,000 for them to buy, to start to be able to invest in treasury bills. He gets frustrated, and his investment of choice could not work out. So, but is this the end for this teacher, who wanted to enjoy returns from a treasury bill with his 20,000? That is the question we need to ask ourselves at this point. Is this is that the end? I'm not sure. Let's see. We move to the third guy. Now, here we have a Boda Boda rider. And as I had said earlier, I'm just giving examples. One of the people that I give respect to most ni majama. So it's not that I'm undermining whatever it is that they do. Na waheshimu sana. So this guy has a boda boda, and after his daily activities, and after doing the maths, and after refueling his boda boda for the next day, getting expenses for that particular day, this guy, we start by noting that his earning is on a daily basis. His earning is on a daily basis, and each day he realizes that he is only able to salvage Kenya shillings 200. But this 200 is what he wants to put aside for a rainy day. Is what he wants to put aside to form part of his emergency funds. And he has also informed akiwa huko kwa shade, hiyo shade yao, he had someone talk about this investment, fixed deposit, treasury bills, treasury bonds. Let's use the example of treasury bonds. But unfortunately, anakumbuka mwenye alikuwa anatajataja hizi vitu, he said that the minimum amount that you should have for you to invest in treasury bonds is 100,000. Is 50,000. Now, is this the end of this guy who had a vision that he can get some returns from treasury bonds? Is this the end for him? He has to put his 200 in an account where they get to earn nothing. We'll get to answer that question in a minute. So is this the end? Now, we have 3 guys, and we don't know whether that was the end for them, earning return from an investment that they really wanted to invest in. And we get to discover that the challenge in all of them is one. There is a mismatch between whatever the amount that they hold and the minimum amount that is required for their desired investment. The other thing that we need to note is that they earn different amounts, and they earn that amount in different frequencies. One is daily, the other one is weekly, and the other one is monthly. Now, what can give a solution to these guys to ensure that they get to invest? That's where the concept of money market funds comes in, because money market funds is simply funds that have been pulled together from different people. That money is invested, and then the returns that is realized is distributed back to those people who had contributed the money. So when I talk about a big chama, this is what gets to happen. Now, we had the farmer. This farmer is somewhere in Nyeri. We had the teacher. This guy is teaching in Garissa. And we have the boda guy. Let's say you're somewhere in Kisumu. Now, here comes the concept of money market fund with someone whom we call a fund manager. This is where we have a fund manager who brings a solution to these three guys. Now, this fund manager will collect the 20,000 from the teacher monthly. 20,000 monthly. This fund manager will collect the 10,000 from the farmer on a weekly basis. And he will collect the 300, it was 200, I think, 200 from the Buddha guy on a daily basis. Then, what he will create, he will just create a pool of funds. This is what the fund manager will be able to create. And now, don't see the three guys. Now we are talking about 1 million farmers giving 10,000. We are talking about 50,000 teachers giving 20,000. We are talking about 2 million boda guys giving 200 shillings at that frequency. So the funds, the pool of funds that we are talking about millions or even billions. Though I don't think there is a... Yes, there are funds that has such big amounts. So we are talking about billions. Now, with these billions, the fund manager will be able to invest in the treasury bills that this guy could not invest in alone. With the huge amount of funds, this guy, once they go to the bank, fixed deposits. Once they go to the bank, they are even able to discuss or to negotiate the rate at which the bank will fix their money. Are you together? So this guy alone could not be able to do a fixed deposit. But from the common pool of funds that was formed by all these people bringing their funds together, they can be able to do a lot of fixed deposits. And with large amounts, you get to realize that you can even be able to discuss the rates that you will be given by your bank. So the fund manager will get a return from the investment that he will make. He gets some returns from this investment. Then what he will do is that he will get some share, what we call the management fees, because the fund manager is not a charitable organization. It is a profit-seeking organization or institution. And this fund manager are banks and majorly insurance companies. So those are the people that we are referring to as, those are the institutions that we are calling as the fund managers. They are majorly banks and insurance companies. So once they get the returns from funds invested, they will get what they call the management fees. And now, what remains, or not really what remains, because of course the management fees is not more than what they distribute back. Then the net returns, let me call them the net returns. The net returns after the management fees is deducted is redistributed back to those people who had contributed to the fund. Of course, in the principle of the more amount you contributed, the more interest that you get to, you gain. In short, it is given as a percentage of whatever you contributed. So these guys, all these guys are in a chama that they don't know. The chama is managed by someone we call a fund manager, but they don't know each other. All of them, they only know the person who manages the chama, who is the fund manager. So that's why I say a money market fund is like a big chama of people who don't know each other, but they all know the guy at the center point, who is the fund manager. And why do they form this big chama without knowing? They form the chama to bring their funds together to create a common pool of funds. With the common pool of funds, they have the ability to invest in different ventures, and in some of them, like the fixed deposits from the banks, they have the chance to get better returns than when you can do that than when you do that as an individual. I hope you get now the concept of money market fund. Using the analogy of the big chama, we come together without knowing each other. We create a common pool of funds. That those funds are invested. We redistribute back the returns as a percentage of what we had contributed. Contributed. That is simple. Now, I'm now sure that you understand the concept on which money market funds are formed. Thank you for understanding.